Okay, everyone, let's begin. It's good to see people coming on time so we can start and early now. Okay, so let's begin with the portfolio. Actually, this week, right, not a lot of stuff happened for the stock market itself, except for the triple witching. Okay, we got triple witching on Friday, but even then, if you look at the Friday candle, not really a lot happening. I think Thursday was a bit more happening because Nvidia actually dropped quite significantly, but aside from that, not a lot of stuff. Okay. Last week we got the CPI and the FOMC, but this week not a lot of big follow-up coming in. So nothing really much to talk about in terms of the broad market or macroeconomic wise. Okay. So now let's go through the portfolio. So for this week, my portfolio went up just by a tiny bit, I believe last week it was like 29%. This week is up about 1% to 30%. Okay. So total net profit loss year to date is about $60,000. So I started this year with 200K USD. Okay, so now I'm hanging around at $26,000 as you can see from the chart here. So this week, a few options expire. The HPE and VSCO expire. Okay. Even though I put the earlier date here, right? I mean, I consider them as a loss already. Okay. I think in fact, I will just leave it like that. Okay. So HPE and VSCO actually expire, lost a bit there, about 5,000, about $6,000 there. And then also the SPY YOLO that we took on the FOMC itself, it also expired with $2,000 loss. And we have Toll Brother, the short leg actually expired worthless, so we got the full premium. Okay, or if you actually exited before the market closed, right, you should still get substantial premium. Okay, because Toll Brother closed above 115 for yesterday. Okay, it was quite a bit, it was a bit of not here not there because initially it was going down and then eventually recover back towards the end of the day. Okay, so Toll Brother got the full premium or majority of the premium, so that's good. And for those who got your Hershey assignment, right, you should get your premium also. Okay, you should get your premium also. But the thing is that on your account, right, most likely you will not see like a statement that's saying you get the premium, but instead what you will have is your position, your assignment position. Instead of like 190, right, it will probably be like 188 like that, because they will account for your entry price. They will minus off from your entry price. Okay. So if your assignment is somewhere around 188, right, it means that your premium has already been accounted. Okay. So in this case, right, for simplicity, I'll just put 190 and then I'll just put the premium there. So it's roughly about the same. Okay. And then all these are the open position that we currently have. So now Applovin, it kind of dropped along with Nvidia on Thursday, but it seems like yesterday recovered back quite strongly. Okay. It's so far doing quite okay, so I will continue to hold Applovin. McDonald actually yesterday went up quite a bit also, actually gap up. Okay, it kind of like gap up. Initially it was like struggling at the bottom here, but eventually managed to gap up, so it became positive. But one thing about McDonald is also it is at the trend line level. Okay, it is around the trend line level. And then as I have stated, right, every time McDonald goes below 30 RSI, it tend to rebound quite strongly. Okay, you can see from here where it rebounded quite a bit. You can see from here it rebounded quite a bit. You can see from here it rebounded quite a bit. So I'm thinking this rebound should probably go back at least to maybe 275, 280, somewhere like that. Okay. And yesterday the gap up kind of like support our trade our trade direction now, okay? But bear this in mind that it is not just the RSI alone now, okay? The RSI is more of like a supporting factor, but what is actually the reason why we took McDonald is because actually the fundamental is not bad, okay? Not bad in the sense that yes, they are facing quite a bit of inflation, but in terms of capturing the market shares, right? In terms of passing on the pricing onto consumers, right? They are actually doing the best lah, okay, among all the other fast food restaurants. So in fact, when the yields are coming down, right, I think McDonald's should do a lot better also, because they also have they are also a little bit of sensitive to yield, since majority of the money that they are getting is also coming from franchise lah, okay. So McDonald doing so far so good. Pfizer, it kind of like, I mean, it lost majority of the value. I'm still holding on to it lah, okay? But for the last 3 day, kind of like recover a bit. So I'm sort of hoping it can continue to recover back up lah, okay? So Pfizer a little bit more of long-term play, so it kind of retrace a bit. But I do think that at some point, right, hopefully here lah, okay, it can just continue to go straight up. If not, it can come back down a little bit lower before it goes up, go back up again, okay? But I do think that this point here is the bottom really. So Pfizer, the option expiration is on August 16. Hopefully we have sufficient time for it lah, okay? So I'm continue to hold on to this. So now let's go to the main discussion for today, Hershey. Okay, now Hershey, you can see there's a lot of stuff going on here. Firstly, right, there was a assignment. So the assignment is here, okay? The stock position. I got the stock position here with 600 shares at $190 per share. And of course, I also have the original put option, which is this one, the original put option at 195. So yesterday, if you are present for the yesterday webinar, right, I actually added 2 additional position for Hershey. But of course, what I encourage most of you to do is to simply just exit everything, okay? Because if you are going to replicate what I am doing here, right, you actually need to be very, very proficient and very knowledgeable in option, and you need to know how to make your own decision and not simply just waiting for my instruction and then you go and blindly copy like that. Because what I'm doing here, it requires a little bit more independent decision making lah, okay? So but just so you all can learn also, I'm just going to explain a little bit of what I am trying to do lah, okay? So since I've already got the Hershey assignment, right, I'm just going to hold on to the assignment. I'm not going to sell it. You can see the assignment is like in a loss lah, okay, about $4,700 loss. But the put option, the original put option itself is about $4,600 profit. So basically, the original put option and the assignment, they kind of cancel out each other lah, okay? They kind of cancel out each other. If Hershey continue to drop, right, my stock position will lose more money, but my put option will gain more money. So they will eventually cancel out each other. But if let's say Hershey recover, my stock position will start to recover, the losses will start to recover, but my put option will start to lose profit, okay? It will start to lose profit. So in a way, they cancel out each other also, okay? So what you need to know is that these 2 position, right, this put option and the stock assignment, they actually canceling out each other. So because of that, I actually added 1 covered call at strike 190, at strike 190, okay? So yesterday it was somewhere around $4 plus $4, I think 90 cents like that. I think I eventually got it for $4.90, okay? Meaning to say that if Hershey recover back to 190, wait, let's put the 190. Oh my god, the button so annoying. Okay, okay, let's say if Hershey recover back to 190, right, what is going to happen is that the stock position will no longer be loss making, and then I am going to get the premium from this call option. So my stock position will get called away lah, okay, because I have the covered call there. So my stock position will get called away, meaning to say I'm not gonna make any losses from my stock position. And on top of that, right, I will get $2,900 in premium from the covered call. Okay, but let's say if Hershey continue to drop below, and as long as it doesn't drop beyond 175, right, I am also going to get the money from the covered call, and I am also going to get the premium from the other short put option that I have there, which is about another $1,800 there. Okay, so meaning to say on both, right, I am going to get close to about $4,000, $4,000, or even $5,000. I'm getting very close to $5,000 on the both of the premium now. Okay, from the short premium, from the short leg at 175, and then the cover call at 190. So no matter whether if Hershey is going to go up or down, I will secure $5,000 in profit ready, because I don't really need to care the stock position and the long put option, because these two, no matter where Hershey is going, they are going to cancel out each other. So what I am actually getting is the pure time decay, the pure theta decay that I am getting from the two short position. Okay, so in this case, this whole position here, right, it is actually delta neutral. Delta neutral as in no matter where the stock go, the option is not going to affect it. But at the same time, the theta, the time is going to decay, and then I will get the premium on both ends. Okay, so I think it's a good position to be. Either way, I'm gonna get that $5,000 premium. Okay, all I need to do is I just wait until like the August 16, okay, which is not really far from now, about 50 days like that. 50 days for $5,000, I think is a very, very good deal. Okay, so that's for Hershey. And next one is Toll Brother. Toll Brother currently right now, the new put option is actually break even, so nothing ongoing now. Okay, but just to share with you also, since we got the premium, the full premium from the short leg, right, about 1,009, and then the original position that we exited earlier, I got about 9,001, so it comes to about $11,000 on Toll Brother alone now. Okay, so it's actually a very, very good uh trade position lah. And as you can see, right, Toll Brother also yesterday kind of recover back, as I was mentioning. If you feel that you do not want to be in Toll Brother anymore, you feel that it's gonna recover or what, right? You can simply just exit this put option. You can simply just exit this put option. You are going to lose very, very minimal amount lah, okay? And you already got a very, very big profit from the previous position already. Or another thing that you can do is you can actually put up a short leg. You can actually put up like a July short or a August short, August expiration short, making it become a calendar. Or even you can even put up a September short with like maybe strike 100, then it become a vertical. Okay, so there's actually a lot of things that you can do right now. So that is the power of option. There's a lot of options that you can take given a situation. Maybe that's why it's called options. Okay, so like in any given situation, there are simply a lot of optionality that you can do in order to benefit your situation. Okay, so now the reason why I am also holding on to the Hershey assignment is mainly because if you look at Hershey, right, it is quite near the support level already. And not only that, right, it actually have broke down quite a lot. You can see one big red candle here from the top to bottom. If you look at the weekly candle, right, it has been down by quite a few consecutive weeks really lah. So I do think that at some point it should at least do a technical rebound lah, okay? At least do a technical rebound. Maybe doesn't have to be 190, maybe until like 188, somewhere like that, also good. Because if this one do a technical rebound, what I can do is I can get rid of my stock position with a very minimal loss, and then when it start to go back down, I will get profit on my long put and all the covered call and all the covered put options there lah. Okay, so that's like the best case scenario. And if that happens, right, I can easily guarantee like another 10k, 12k, 13k from the Hershey trade alone here lah. Okay, so Toll Brother just now I go through already. So Palantir unfortunately on Friday it dropped by quite a bit lah. Okay, in fact, it tried to recover, but eventually went back all the way down. It's down about 6.7%. But nonetheless, right, it is still up by quite a bit from our entry lah. Okay, our entry is like around $21. So it is still up by a bit lah. So now a few things that we can do. So you can see here, Palantir, the premium is still quite okay. I'm still up about $2,400. So if I want to be safe, right, I can actually get rid of this. On Monday, I can simply just TP the position lah. Or if I want to continue to hold on to it, oops, sorry. If I want to continue to hold on to Palantir, right,
Reestablished.
I can actually consider putting a short call also, probably a short call at 27 or even 28 there, in order to like at least reduce the risk a bit lah, since it is going down. So I'm not sure what I want to do. Looking at my overall portfolio, right, I do have quite a lot of bullish position now. Okay, you can see I have 7 bullish position against 4 bearish positions. So perhaps getting rid of this may actually make sense because there's some profit and I am able to reduce my bullish exposure also lah. Okay, so I'm kind of thinking from two angles. The first angle is just based on the stock alone. Do I think this stock can go up a lot higher? Actually, I do think this stock can go up a lot higher. But on a portfolio level, right? If I want to reduce my bullish exposure, this is the best stock that I can remove lah, because it's actually in quite a big profit. I mean not big lah, quite a modest profit. And if I need long exposure on tech sector, I still have Applovin here lah, okay? And I think both are in somewhat similar situation in terms of the stock price movement. Thursday fall down, but at least Applovin recover on Friday lah. But Palantir actually fell even more on Friday itself. So perhaps getting rid of Palantir might be a good choice lah. Okay, so that's something we KIV for a while. Monday we see how lah. Okay. Next, BXMT. BXMT is our Blackstone mortgage. Currently sitting at break even. So you can see Blackstone mortgage recently did a bit of a rally lah. Okay. But I will continue to hold on to this until expiration. If it decide to rally further, then so be it. But if it decide to continue to go back down, then of course we are going to capture the profit here lah. Okay. And the reason why I'm looking to hold on to this is because I have only 4 bearish position. If I get rid of this, right, at break even, then I'm gonna be left with 3 bearish position, and that will mean that my portfolio is heavily skewed to the bullish side. And if let's say next week market decide to like sort of do a very big retracement, right, then my portfolio will suffer greatly lah. Okay, so SEMR, unfortunately, I don't think I'm able to sell it off because the spread is very big. Like BXMT, right, I'm gonna hold until expiration lah. Okay, hopefully it can recover lah. So actually we are quite loaded on tech long position also. SCMI is a tech long position, Applovin is a tech long position, Palantir is a tech long position. So with this in mind, right, I do think that it is actually make a lot of sense to get rid of Palantir lah. And if we need it again in the future, we can enter it again lah. Okay. So AMR doing very well, doing extremely well since our short position. I'm not sure where lah, somewhere around here, I believe, is doing quite well. And I think it kind of like break below this support level already. Yes, I mean Friday recover a bit, but I do think the pressure is still on the downside lah. Okay, it's still gap down nonetheless. It is still down 2.27% lah. Okay, so I think it can go down some more. So I'm just simply gonna hold on to this position also lah. Okay, and then of course we have SATS. SATS is the Singapore stock lah. Okay, it sort of retrace a bit, but I'll just let it be. I think this one can go a lot higher. So if it's retracing, then good lah. I mean, those who did not get the original entry at 280, right, you can actually consider right now. 2.86 is not far off from 280. I am hoping for it to at least close the gap lah. Okay, maybe to 3.8 like that, or maybe even towards $4 like that. but it's more of a long-term play lah, mid-term, long-term play lah, okay? And I mean, whole also good, we get dividend of it's 15 cents. So pathetic, 15 cents. I I actually got 1,000 shares, and 15 cents is like only $15. What can I do with 15? It's not even $150. Okay, that's says, and then of course we have the last two, Lumen and Elogen, which are waiting for short squeeze now. Okay, in fact, Elogen recently have a bit of recovery here, and in fact, it's kind of like at the support level, the downside is slowing down a bit. So if you are the kind that want to play the technical, right, I think it's quite a good low risk entry lah. Okay, it's quite a low risk entry. Even if it recover back to $4 or $5 back to here, I think it's still I mean, if you enter here, right, it's a very, very good return lah. Okay, it's something that you can consider. Lumen Technology is doing quite bad lah. Okay, it's doing quite bad, but once again, it is a long term also. It's a long-term trade, and I'm prepared to hold this until zero lah. Okay, sorry, I'm prepared to hold this stock until zero. So even if it goes all the way down to zero, I'm perfectly fine lah. Okay, because let's say Lumen Technology, if it goes to zero, I lose 6,500 lor, because from the beginning, that was the plan for the beginning already. I have no intention of cutting loss on this lah. If it goes to zero, then goes to zero. If it get delisted, if it declare bankrupt, whatever, right, so be it. The amount that I put in is the entire amount I am willing to lose lah. Okay, so this is the overall portfolio. So going forward next week, right, not a lot of things happening except for the PCE data. Okay, the PCE inflation number is coming out. So I would think that the PCE number will sort of decline also, considering the PPI and the CPI actually decline. And the market is already heading up quite fast and furious lah. So I'm just gonna keep to whatever position I have, and then we see what new position that we can enter lah. Okay, so as I mentioned, right, most likely I will get rid of Palantir to sort of reduce the bullish exposure, so that we are somewhat close to a neutral position lah. Okay, so a few potential trade that is on my watch list. Eventually, I may or may not enter, but these are the stuff that I am looking at. Okay, the first one is Mondelez. Mondelez, I'm looking on the short side. So Mondelez is something like Hershey lah. Okay, it is a chocolate. The company based around chocolate lah. Okay, so you have brands like Cadbury and Toblerone under Mondelez. And of course, it is definitely affected by the very high cocoa prices now. Okay, so for the last quarter, the cocoa prices went up like 400% like that. So it's quite jialat lah, which is why Hershey is dropping quite big, and which is also reason why we shorted Hershey lah. Okay, because of the high cocoa prices. But right now, given this current position in Hershey, right, to be honest, my Hershey position, it is neither bullish nor bearish. It is just floating there. It actually have no impact. So I wouldn't mind taking another shot on a similar theme lah, okay, which is bearish on any company that is using cocoa as a raw material. Because of the high prices, is definitely going to affect their profit margin by a lot lah. Okay, so now the issue with Mondelez, right, is that the stock is actually hanging out at the support level. Okay, so maybe it can rebound, and then after that, then it kind of drop. So I need to sort of find a good structure for this. And then at the same time, we have earning coming out on 23rd June, which is like next month now. Okay, so KIV, I may enter this next week. So for those who already exited your Hershey fully, right, you can actually enter this also, because I mean, you do want some exposure in this kind of short position lah, to take advantage of the high cocoa prices lah. Okay, so this is Mondelez. Next quite important, Micron. Okay, so Micron earning is next week, on the 26th June, which is a Wednesday after market hour. So initially yesterday, right, I was looking at this and I was thinking whether if I can short this. I was looking from a short perspective, okay. I was hoping it will end up like Dell like that, because Dell similar situation, quite a similar situation. We shorted like here, and then the next day it got down, okay. So now for Micron, right? I was initially looking to make that kind of short, but it kind of like already got down yesterday. It already got down yesterday, really. And in fact, I actually spent today the entire day looking at their previous earning report, looking at the last year report, and just researching it overall. And I do think that Micron actually have a lot more upside than downside lah. So for earning play, right? Not just earning, just a normal play. We can probably enter this on Monday. We will probably be going for a bullish position lah, okay? Which all the more we should get rid of Palantir lah. We get rid of Palantir and then we add Micron, and then we are still on a bullish bias. But anyway, the market is still very bullish anyway lah, okay? So now why do I think that it is more favored towards the upside? Is mainly because as I have told you the story yesterday about my experience in the AI seminar given at the Microsoft there, and how Lenovo is actually producing AI workstation, AI laptops, all this, right? And then they have this processing unit that is made specially for AI processing, okay? So what Micron is actually focusing on going forward, and I also believe that this is the next area of growth, okay? So you may want to go and find other stocks, other companies that are fighting for this space. I think there's a lot of growth that it can occur there, and that is AI in mobile. Sorry, I was coughing. Is the implementation of AI in mobile appliances, for example, like your handphone, your laptops, okay? In fact, Apple was the first one who actually did it with their partnership with OpenAI and ChatGPT, okay? And because of that, Apple actually went up quite crazy, okay? Quite crazy. So in the past, right, I was quite bearish on Apple because all they have to offer is iPhone. But now with this new implementation of AI into your mobile devices, right? I think there's a big market space there, okay? So I probably will not be looking to short Apple in the future. Whether or not I may want to long Apple is another question, but I do think instead of Apple, right, we can actually long Micron, because Micron is also producing quite a lot of the upstream materials that is needed to power all these AI mobile devices, okay? In fact, right, Micron have a partnership with NVIDIA, and Micron is providing the material for NVIDIA to build the chip that is actually going into Lenovo AI workstation. So there's actually like a dual layer of production chain there, okay? So all these stuff are happening, and as I said, right, I am quite bullish on the overall AI application in mobile devices. Like in fact, you may even want to go and look into some of the China stock. They might be doing something similar. In fact, I was looking at Xiaomi. You can actually see Xiaomi there. Xiaomi recently rallied quite a bit also, but I'm not sure whether if they are doing anything regarding the whole AI and mobile devices, okay? But definitely Lenovo is involved, and of course, if you are waiting too long, right, you may consider longing on the short retracement, or maybe slowly scale in, okay? You can enter a bit first, a bit later, that kind of stuff, okay? And you can even see how both Lenovo and Xiaomi actually surviving quite okay, considering the fact that for the past 2 days, right, Hong Kong actually have a two red candle, it kind of like going downtrend, but those that are in this particular market, right, they are actually doing quite okay. Like even JD is like cannot make it all the way down, but there are specific Hong Kong stocks that are actually doing well, okay? So this is what I mean by we don't play index. There's no point in playing index. And in fact, a lot of people keep saying they are bearish on US market. but they keep shorting the S&P 500, which totally doesn't make sense because yes, the US market is bearish, but the thing is, everything in US market is bearish except the tech sector. And S&P is a very heavily weighted on tech sector. So you're actually shorting the one thing that you shouldn't be shorting. So you should be looking for individual stocks, okay, to get the what I will call the alpha return. Alpha return meaning your return is higher than the market, okay. So for the upcoming earnings, I will definitely play Micron on the long side, but we cannot also not think of the situation where it can actually fall further, okay. So if it fall further, right, I will say that I'm gonna pick up more Micron, okay, if it goes lower. So the structure here, the trick here is to come up with a structure that even if it fall, right, we have the holding power and we can actually hold until it recovers, okay. Meaning to say we're not going to play like 1 week expiration or maybe even expiring on July like that. I think even July is too soon already, okay. So we'll probably have to play a bit of longer expiration, maybe like September or even until October like that. And perhaps we may consider calendar in case it falls. I see what kind of structure I can come up with, okay. So it's something that we do not want to YOLO. Although the earnings is coming out, right, we are not taking this trade as a YOLO trade, but we do want to be in this uptrend, okay. So with that said, right, I think there are quite a lot of other stuff that is worth looking back again. For example, Dell, right, Dell also recover quite big, and HPE we previously shorted, but the earning it also went up by quite a substantial amount. So these are some of the company that maybe we can reconsider looking again to see what kind of growth initiative they have within this AI mobile space, okay. I do know AMD is also producing their own workstation, because during the seminar AMD was there also, and they are sort of advertising their new workstation also, and in fact the sales on their workstation is actually quite strong, okay. So in terms of long position, right, yes, Micron, and the other one that I share, which is a short position, which is Mondelez, okay. So these are the two new trades that I have, and we will continue to hold on to Toll Brothers short, because I do think that there is more downside coming in the home building weakness, okay. But we can probably add a short leg, not necessarily September expiration, but rather August expiration, okay. We see what we can do. And also, if McDonald continue to go up higher, right, I may consider adding position in McDonald also, okay. So aside from that, I have also mentioned I'm looking at this KWEB. KWEB is the China Internet ETF, okay. It's the Chinese ETF for all the application, all the internet application like JD, Pinduoduo, all this kind of stuff, but as you can see, right, it's not doing that well, and the chart itself is very, very similar to JD's chart because I mean JD is one of the bigger weightage, okay. So I'm also waiting for a bit of recovery to see what's going on here. I'm still a little bit skeptical on the whole China market, okay. Yes, it does have a good recovery, but now things are coming back down already, so on the other side, the steel industry, we were looking to short the steel industry, because steel industry mainly serve the construction sector, okay. So if the construction sector are not doing well, right, then of course your steel fabricator, steel manufacturer will also not be doing well. So in this case here, AMR, right, as you know from last Friday, or I mean yesterday, I am continuously adding more and more position to AMR, okay. My target is somewhere around probably 260, or maybe even all the way until 240 I do foresee this going down even further, okay. So now let's cover Singapore stock a bit, because there are some potential that is popping up that you may consider. Of course, we have sets ready. We have sets ready, lah, okay? But there are some other stuff that you can actually consider, and one of them is actually UMS, lah, okay? So UMS has always been my long time favorite stock because whenever it crash, right, it always recover one. Whenever it crash, it always recover and always recover very sharply one. You can see here, right, very sharp. Here, very sharp. Here, very sharp. And the thing is that if you enter at the crash, you actually get very, very good dividend because even right now it's giving about 4.55 dividend at the current price, okay? If you enter at like way lower, right, you probably can get around 5%, 6% dividend. But the reason why I'm looking at UMS is that recently I saw news about Applied Material looking to expand their operation in Singapore, okay? So UMS biggest customer, like 90% of UMS revenue is actually coming from Applied Material, okay? So if Applied Material is doing well, then most likely UMS also will be doing well. And if they crash or whatever, right, it's fine because UMS actually give out a nice dividend. So it's for a very long-term hold period. In fact, I have quite a substantial amount of UMS which I have been holding all the way from like 2015 like that. Around, I remember my original buying price is like 50 cent like that, but not this 50 cent. Back then it was 50 cent, but they did quite a lot of bonus and stock split, okay? I believe there was like 2 rounds of bonus and stock split, or 3 rounds of bonus and stock split. So if I want to sort of account for that, right? My original position in 2015, it was probably like around 10 cent like that, if I consider all the stock split. So it's doing extremely well. And not only the capital appreciation is there, right? The dividend that I gain over the years is like that alone is quite a substantial return on my entire portfolio. So in fact, back then, right? Back then the dividend payout was about 10% like that. I remember when I bought it, I got it for 50 cent like that. And then every year they were giving out 5 cent dividend. So on top of a 10% dividend, right, the capital gain is super duper enormous. Okay, so UMS you can consider. And the other one is actually Jaffa. Jaffa kind of recovered a bit already, but there is a catalyst behind this particular counter, and that's the bird flu, okay? That's the bird flu. So Jaffa actually deal with things like eggs and poultry. So because of the bird flu, right, poultry prices are up, egg prices are up, and then of course that will definitely improve Jaffa overall profit margin, and in fact you can see it going up already. So given this price action, right, I do think it can go up further, but the only issue is that it's very slow, okay? It's super duper slow, and I don't really want too many Singapore stock on my portfolio because of the fact that they are slow. Even for sets, right, it's because they are giving dividend, okay? At least if it's slow, you can hold for dividend. But Jaffa, I mean, yes, they do give dividend, but not really a lot. So you can consider this. You can consider this if you want. And on Friday, yesterday, quite a number of stuff appear on my scanner, which are all looking very, very good. Firstly, Costco. So for those who come for the course and get the scanner, doesn't mean now you're doing US stock, you don't use radio, okay? It's still very, very useful, and it's still giving quite a lot of profitable trades. So Costco kind of like what you will call your cup and handle shape, okay? But recently there's a bit of a volume spike coming around this level, and there's another spike on Friday. So there's a lot of buying pressure coming in, and maybe it can go up further. So Costco is a bit of a lagger within the shipping transportation sector, because if you look at things like Samudera shipping, already rally until don't know where already. Rally until don't know where already. If you look at YZJ shipbuilding, also don't know rally until where already. So Costco kind of like a little bit lagging now, okay? And the other one is Mermaid Maritime. So Mermaid Maritime is more of a oil and gas, but I'm not really sure why particularly Mermaid Maritime is doing well, because other oil and gas sector is not really doing that great. But I think they also deal with transportation more than oil and gas. So you have to sort of look at the description, okay? So for Mermaid Maritime, right, when it came up on the scanner on Friday, it was actually early in the morning when it was around 185, around 185 like that. So I actually managed to play a very quick contra lah, okay? So I log into my poem, I bought like quite a significant amount of share, and then within the same day I sell back already lah. When it go up to like 195, right, I out already lah, okay? But I mean it was like those kind of, oh my god, like early morning, nothing to do, very sian, that kind of play lah, okay? But even if you don't even if you miss out the scalping opportunity, right? It is a very, very good trade setup, a rally coming in now, okay? So perhaps there can be more upside coming in. You can maybe want to take a look at this. And the last one is Bengquang. So Bengquang also quite similar. Actually, in fact, Bengquang came out on the scanner on Thursday. This candle, it was already on the scanner already. On this candle, it was already on the scanner, and then the Friday sort of confirmed the whole thing lah. But by then it already gap up quite a bit lah. Okay, but if you are paying attention to Discord or Facebook, right, I actually shared Donghuan quite early in the day lah. Okay, in fact, when I shared the Mermaid Maritime also, it was quite early. In fact, after I enter, I straight away share here already. It was like 187. And for Bengquang, it was about 205 like that. When I shared, it was around 205 like that. And currently it's around 215 lah, okay? And hopefully it can go up higher lah. So these are all what I will call technical play lah, okay? Not really fundamental, or not really the same process that we use for our US stock, but I mean, if the momentum is there, if we have some kind of good macro tailwind, right? In this case, the transportation stock or the shipping stocks, right? Is doing quite well lah. So maybe you can consider this lah, okay? Along with the Jaffa. So this one up to you all, what you all want to do with it lah, okay? I normally don't post Singapore trade that much, or I don't put it up as an official trade, because most of the time my decision are not really based on the process that I'm currently using right now. It is more of like hit and run, got money it's already lah, okay? Like if lose then lose, if no lose then okay lah, good. If get a bit of profit also happy lah. Not those kind where I am looking for like 10k, 12k profit like US stock like that. This one I get 1-2k profit, I'm very happy. I'll straight away already. Because for Singapore stock, if you miss the rally, or if you miss the selling window, right, you have to be prepared to stuck for a very, very long time. You know, for example, this one rally, and then you go and buy here, right? Then you are stuck for like 2 whole months already, or even one whole month. Okay, this one all the way from like 13 March all the way until like end of end of April like that. So you get into this kind of situation, which is not really that optimal. Okay, so that's all I have for you guys. So for next week, important Micron earnings, and then on Friday, which is Wednesday lah. Okay, Micron earnings Wednesday after market, meaning to say the last chance for you to enter Micron is on Wednesday market hour. But I believe we will be entering on Monday ready lah. Okay, I just have to work out the structure a bit. And then on Friday, there is inflation data coming out. And then aside from that, nothing else really. Okay. Then we'll be heading to July. And then July, the 4th of July, US holiday again. They like every month got one holiday like that. Yeah, very annoying. Like. Yeah, so they got 4th of July holiday, and then we are into the next earnings season really. We're actually going into Q3 really. Okay, so we have to prepare for the earnings season again. So everything repeat all over again. Okay. So it's the same old, but anyway, that's how trading is lah. We live season by season, earning season by earning season. Okay, guys. Have a good night. Have a good weekend. Thank you everyone for coming. See you.